What's going on? Broke Investor here, back to talk about stocks. Today's video will focus on one stock. We're going to look at Starbucks, ticker symbol SBUX. I'm going to go over, the company, a timeline, a did you know, and some numbers that, the numbers do not lie. Before I get started, obviously, I'm not a financial advisor. I'm just a broke-ass investor here on YouTube, sharing my opinion on what I think of certain stocks. So if you're looking to invest, do your own research, hire a financial advisor if you want to, but don't go by what I say. Anyway, let's get started. So Starbucks, obviously, they sell coffee. Everyone loves Starbucks. Unless you're a Dunkin' fan, then you probably hate Starbucks. Or you could like both, like me. But Starbucks has been growing over the past couple years. And, they're a dividend-paying stock. And they're a pretty good company, in my opinion, to own. So that's why I wanted to talk about the company today. Again, I'll cover a few things. That's the mermaid, the Starbucks mermaid. Terrible drawing, but I rushed it. And there's the ticker symbol SBUX. Hopefully you can see it. So we'll just get started. Let's start with the timeline. So in 1971, that's when their first store opened, and that was in Seattle. 1982, Howard Schultz joined the company. That was the chairman and chief executive. I believe he actually left and then came back later on too. 1988, they offered full health benefits. Good to have. 1992 is when they became public and the IPO was announced. 1994, that's when the first drive-through got created, and that's when everyone started getting very lazy. Once the drive-through comes out, forget it. Nobody can get out of their car, God forbid. 1998. That's when they started entering grocery stores. 2002, that's when they started offering Wi-Fi, which, as you know today, people go to Starbucks to work or work on things, using the Wi-Fi. So, obviously, that was a long time ago, 2002, but it's good to know. 2009, that's when they started their Starbucks reward program, which I do not use, so I know nothing about. I guess it's on the app and you sign up, but anyway. 2011, they started selling K-Cups, offering K-Cups. And 2015 is when they launched the first cold brew iced coffee. Again, I'm not really into that. I don't get it. I hate iced coffee. I like my coffee hot. But this is a big hit, so that's when it came out, 2015. The reason I stopped in 2015 is because I was getting this information from their investor relations page, as I do mostly, everything, because that's the best, most trustworthy source for a company. So I wanted to make it a point to stop there, and they're basically, I guess, either the website coordinator got lazy, or nothing substantial happened, in the last 4 years. But I don't know. I figured I'd leave it that way. So that's the short timeline. Now, I entered a little section here called Did You Know? For those of you that follow me on Instagram, this is kind of repetitive, and I apologize, but I felt like this stock and this information was worthy of a video, so I'd like to cover it again. So the Did You Know, we'll cover some fun facts. First being, they own their own record label. It's called Hear Music. I believe it's played in the stores. Can't really hear it anyway. The place is always so damn busy. Another thing is this fancy mermaid logo. It used to actually be a naked mermaid showing her boobs way back when. Obviously, that has since gone away because society can't handle a naked mermaid. God forbid. The name Starbucks came from Moby Dick, first mate, whatever. I don't know Moby Dick. I'm sure Maybe some of the older people know, but although I'm pretty old and I still don't know. They have a 10-minute rule. This is for Starbucks customers. This is important. There's a 10-minute rule for opening and closing, so they have to open 10 minutes early and they have to close 10 minutes late. So if you want to get to Starbucks early, you can get there 10 minutes early, assuming the person opening actually abides by that. So I'm not sure how strict they are on it, but although it's kind of rude to do that as well, more so at the closing time. People are trying to go home, They donate all of their old food, as everyone should, all these restaurants. So I don't know. Anyway, coffee masters wear black aprons. If you go there often, you'll see a guy with a black apron. He's the coffee master. So if you need something, you probably ask him. I'm not sure what the other people wear, but anyway. And last but not least, did you know that they sell 8-ounce drinks? Like a small size, I guess. Apparently it's not on the menu, but you can order it. So, voila. I don't know if you know that, or if you care, but it's a did you know. Now, I want to cover the numbers, because as you know, the numbers do not lie. Should you invest in Starbucks as a company? Let's take a look. We'll look at the numbers from 2015 all the way to 2018. And you guys can make the decision on your own from there. So I put, a couple of the most important things, I think, in my opinion, statistics. Revenue, 2015 was $19.1 billion. 2016 was $21.3 billion, obviously went up. 2017, $22.3 billion. And 2018, $24.7 billion. So the last 4 years, the revenue has gone up every single year. Perfect, right? Check, check. Net income, $2.8 billion, $2.8 billion, $2.9 billion, and $4.5 billion. Kind of stayed still the first 2 years, 2015 and 16, and then gradually went up, and then really went up in 2018. So that's good to see. I added the shares, outstanding shares. So it went from 1.51 billion to 1.48 billion to 1.46 billion to 1.39 billion. And what does that mean? These are the outstanding shares that shareholders can purchase from. So when you see buy and sell orders, this is how many are out there and available. So how can it go from 1.51 to 1.48? So the reason for that is the company, Starbucks, will decide that, they want to do share buybacks. So maybe they felt that the company was at a good value at that point. Or they wanted to make the earnings per share look better. Either way, they've been gradually continuing to purchase shares as the year's gone on, as you can notice. So, which, to me, that's a good thing, because the less shares that are available, the higher the value of your stock. Earnings per share, I added this because I just wanted to show you how earnings per share is calculated. Because you take the net income and the total amount of shares, and you divide the two together, and you get the earnings per share. So for each share in 2015, compared to the net income, it's worth 182. For same thing, 2016, 189. 2017, 197. In 2018, 324. It jumped up huge. So obviously, when you look at the estimates of a stock and you get you see these earnings calls come up, the estimates are based on EPS, earnings per share. So, you want them to go up. But as I said before, the companies can actually kind of control that by share buybacks. So that's something I kind of have learning, more recently as of late, which, to me is very important, because when you see share buybacks, yes, it's good to me because the company, they believe in themselves, or, they're just, they see a value, which it does affect the earnings per share. But anyway, that's EPS. Now, dividends. These are annual payouts. So 2015, they paid out 68 cents. 2016, 85 cents. 2017, 105. 2018, 132. So, they've been raising their dividend year over year over year over year. So the the growth rate from 15 to 18 is 94.12%. That's pretty good for 4 years. So had you owned the stock way back when, your yield on cost would be looking pretty damn good right now. Payout ratio. Again, I wanted to show you this because it's based on numbers already on here. It's based on the earnings per share and the dividends. So what percentage of the dividends are being paid out versus the earnings per share? So 2015, it's only 37%. 2016, 44%. 2017, 53%. And then 2018, 40%. Obviously, it went down because of the earnings per share went up huge. They raised their dividend, but not that much. So again, it's how much of the earnings is actually paid out in dividends. So you want this payout ratio to stay pretty low, under 70% for the most part. And as you can see, in most years it's under 50%, which is it's pretty damn good. They can afford to pay out their dividend with just earnings. If this number is 100% or more, that means they're borrowing money to pay you dividends. So if you're invested in a company that can't afford to pay you the dividends just on that earnings, that's not a good sign. Stock price, 2015, Starbucks stock was $56.44. 2016, it went down to $52.98. 17, it went $55.83. 2018, it went up $64.06. And as of today, it's $90.29. So the company has gone up pretty, a lot lately. So if you owned it in 2015, it's almost, close to 100% gain as of today. But you're pretty happy if you bought the stock in 2015. I got into stocks in around 2017. I did buy Starbucks, so my average is around here, the 55, 57 range, I believe. So I'm still happy. So it's tough to buy shares today, $90 a share. Obviously, I'm averaging up, but I need to get over it. If you believe in the company and you're holding a stock for the long term, you have to accept averaging up. Again, I'm pretty new to that part of it, so I need to accept it. Anyway, let's continue. So I also wanted to cover the balance sheet. So now I'm going to look at assets and liabilities. So assets in 2015 totaled $12.4 billion. 2016, $14.3 billion. 2017, $14.4 billion. 2018, $24.1 billion. So obviously the jump in 2018, for the most part, in every category is good until you look at liabilities. 2015 total liability $6.6 billion, then $8.4 billion, $8.9 billion, and then $22.9 billion. Holy crap! And it's mostly categorized under long-term debt. So they don't have to pay it out right now, but they're gonna have to pay it out in the future. Hopefully they work on that. Equity, it's just assets minus liabilities. So as you can see, it's kind of stayed stagnant at 5, and then 18 it went down to 1. So hopefully they work on that, the long-term debt situation. Outside of that, I'm pretty impressed overall with the company Starbucks as a long-term dividend investor. So I would love to hear, everyone's thoughts, not only on this video, but as far as Starbucks goes as a long-term investment. Is this a company that you're buying and holding forever till you die, collect the dividend, and go from there? To me, honestly, this is one of the companies where you'll get not only the dividend, consistently, but you'll get dividend growth consistently, and you'll probably have a lot, of capital gains. Not that we're selling the stock, but there will be capital gains, because this company, yes, they sell coffee and some food, but down the road they add stores all the time, and they're starting to sell more and more, different types of food. And people are so committed to Starbucks. The Starbucks, there's Starbucks people will call them. They're not gonna ever give up their Starbucks. So, and they're committed to it. Who's gonna come in and disturb Starbucks? I'm sure, Dunkin' is their competitor, but who else? I mean, they can survive together forever, in my opinion. So, anyway, I hope you like this video. Talking about Starbucks, the company, fun facts, and the numbers. So, if you did like the video, please leave a like. If you hated it, leave a like. No, just kidding. But anyway, leave a comment, share it, please. Again, Broke Investor, YouTube channel, making a video once per week on my lunch break when there's peace and quiet at my house. So, anyway, long SBUX. Later.